Welcome, future CPAs of the Philippines, to this explainer. Let's be real, if you're a BS accountancy student staring down the barrel of that massive financial accounting and reporting syllabus, you already know it can feel completely overwhelming. But today, we're doing things differently. We're using a pure white background, minimalist setup to absolutely eliminate cognitive overload. We aren't just cramming for next week's quiz, we're building a 3-year, long-term retention strategy so this knowledge is locked in the vault for the actual LECPA board exam. Let's get into it.
Here is our roadmap for today. We'll be hitting LEC PFAR study hacks, the 3 steps to record, the book of original entry, the anatomy of a journal, simple versus compound entries, and finishing up with a rapid-fire board exam bullet review.
All right, let's kick things off with Section 1, LEC PFAR study hacks. So how do we actually lock this stuff in for 3 whole years? First up, master the macro framework. Seriously, you gotta know where you are in the big picture of the accounting cycle before getting bogged down in the tiny details. Second, use the rule of 3. Our brains literally love chunking information into sets of 3 for recall. It's a total game changer. And finally, always focus on the why. Don't just blindly memorize where a number goes. Understanding exactly why a formatting rule exists makes it stick infinitely better.
Moving right along to Section 2, the 3 steps to record.
Leaning right into that rule of 3 we just talked about, let's cement the absolute core sequence of the accounting cycle into your mind. Step 1, analyze each transaction. What is it doing to the accounts? Step 2, enter that transaction in a journal. And Step 3, transfer that journal information over to the ledger. Analyze, journalize, post. Go ahead and say it out loud right now. It actually helps encode it.
And here is how that flows in the real world. A physical piece of business evidence, like a sales slip, a bill, or an invoice, kicks off this exact 3-step analytical flow in practice. You start by analyzing the raw document, then you enter the data into the journal, and finally, you transfer it to the ledger accounts. This right here, it's the literal heartbeat of a company's financial system.
Let's zoom in a bit. Section 3, Book of Original Entry.
Now, you might be wondering, what exactly is the general journal? Well, it's undeniably the origin of a company's financial truth. It is literally known as the Book of Original Entry. That means every single transaction hits this book first, and always in strictly chronological order. Think of it as the timeline of the business. And it makes sense, right? If this initial record is flawed, the entire financial statement is going to collapse down the line.
But it's way more than just a list of dates. The journal serves 3 major protective purposes. 1, it discloses the complete effect of a transaction all in one single place. 2, it gives you that perfect chronological timeline. And 3, and honestly, this is absolutely huge for your board exam. It prevents or locates errors. Because you can instantly compare debit and credit amounts, it keeps multinational companies from making billion-peso mathematical disasters.
Okay, on to Section 4, Anatomy of a Journal. Let's scrub in and look at the actual rigid formatting. Check out the entry for September 1st. Notice how the date sits way over on the far left. Then, see how the debit account, cash in this case, is pushed right up against that extreme left margin. But look directly below it. The credit account, common stock, is explicitly indented on the very next line.
Let's connect this back to our study hacks. Remember, we need to know the why. This indenting isn't just an aesthetic choice to make the page look pretty. It physically separates the data. By forcing credits to the right, your brain can instantly detect if debits equal credits before you ever even touch the ledger. It's a brilliant visual error detection system built right into the structure itself.
Which brings us to Section 5, Simple versus Compound Entries. So, what's the real difference here? A simple entry is super clean. It's a 1-to-1 ratio, exactly 1 debit account and exactly 1 credit account. But a compound entry requires you to balance 3 or more moving parts all at the same time to properly record the economic event. And honestly, this is exactly where a lot of us Gen Z students drop points on quizzes. We tend to rush the analysis, so take a breath and take your time here.
And here is the absolute golden rule for this topic. If you remember literally nothing else about mechanical formatting today, remember this. The standard format strictly requires that all debits be listed first. Period. You list your debit accounts at the extreme left margin, and only when you are completely done with all of them do you start indenting and listing your credit accounts.
Let's wrap this up with Section 6, Board Exam Bullet Review. Burn these high-yield FAR points into your memory right now. Ready? 1.
Journaling is absolutely always in chronological order. 2. The journal shows the complete effect of the transaction in one spot. 3. Credits must be visually indented. And 4. For compound entries, every single debit must be listed first. Stare at this list for a second, really encode it.
Let's trigger a little active recall before we finish. Visualize how you'd format this transaction based on what we just mastered. You buy a truck for 14,000 pesos. That's an asset increasing, so that's a debit. You pay 8,000 pesos cash, an asset decreasing, making it a credit. And you owe 6,000 pesos on account, a liability increasing, which is another credit. Following our golden rule, you must write that 14,000 peso debit to equipment first on the left margin. Then you indent the cash credit and indent the accounts payable credit right below it. Did you see it clearly in your head? Awesome.
By cutting out the noise and focusing strictly on how this information flows, you're rewiring how you study. Keep building that mental schema. Trust the rigid structure of the journal and remember the why. Apply these cognitive hacks consistently and you will absolutely crush the FAR board exam. But I'll leave you with this little puzzle to think about. If the general journal is perfect, what exactly happens when a flawlessly formatted compound entry gets transferred entirely to the wrong account in the ledger? We'll leave you to ponder that financial nightmare. Keep grinding, future CPAs.